I was really able to focus on the sales and marketing part of the business. And that's how I started to, make a good amount of money as a young kid doing it virtually. I eventually moved to California during this whole process because I no longer needed to be in New York because there wasn't really doing deals there. And I started virtually doing deals in Dallas for 3 years straight. Because if you're new, you can still get in the door. You can drive for dollars. You can, find the really distressed lists and flag the vacants. You can do that, I'm sure, on REsimpli. You could have a list stacker. You can still get in the door, but it's just gonna have to put a little more legwork in nowadays. If I spend the 10 grand a month, which is scary, historically I'm making 30 to 40 back.
Hey guys, this is Sharad with REsimpli, host of the REsimpli podcast, bringing you a super special guest on this podcast, Greg Helbeck. Greg, how are you doing, man?
Sharad, always good to talk to you, my friend. It's been a while since we last spoke.
I know, man. I know. It's always so good to see you. I think it's been year and a half since we last connected, or maybe longer. I think last time we spoke, COVID was still around, right?
Yeah, I think it
Yeah.
was. We saw each other in person. I think in 2022 we saw each other
In
in,
Tulum,
in
right?
Tulum. We saw each
Yeah.
other, but we talked
Yeah.
after that.
Yeah.
So it's been over 2 years since we've last seen each other. I gotta make a little trip back to California eventually
For
and
sure.
meet up with you or
Yeah.
something.
Tell us a little bit about yourself, man. Where do you live, man? What kind of investing do you do? Where do you invest?
Sure. So I live in Seattle, Washington. I just moved here 90 days ago. And the market that I mainly invest in is actually New York, where I grew up, where I'm born and raised. So our business comprises of fix and flips, wholesales, and rentals for the most part. And still, I guess, wholesales too, but that's
Yeah.
basically a fix and flip.
Majority in New York and a little bit in Seattle area.
So the way that I've had the business is the New York market has always been our core center, right? Where that's where we're really established. We have very good systems there. And then everywhere I lived, I always did deals. So when I lived in San Diego, I do some deals there. I lived in Reno for 6 months and I did some properties there. And now I'm in Seattle, so I'm starting to do deals here now. So
Yeah.
I'm not a big fan of go into the nation or whatever. I'd rather
Yeah.
be going really deep in 1 to 2 areas versus going wide. I mean, you can make that work, but that's a completely different business model.
Yeah, I feel like you leave a lot of money on the table if you go broad rather than going deeper in one market. Then
Oh
you start
yeah,
picking. Yeah.
it's tough because
Yeah.
when you're doing that, you're most likely wholesaling. And like you said, you really don't understand what you're buying and selling. You're kind of just arbitraging the Zillow values and,
Yeah.
and looking for low hanging fruit buyers. So you can do it, but like I said, I'd rather go deep in a market and have multiple exits versus, just lock up a bunch of stuff and try to assign stuff to random people.
I agree, man. And how long have you been investing for?
So I started in 8.5 years, almost 9 years, basically 9 years, because that was
Yeah.
in 2015. Yeah.
What's your story? How did you become a real estate investor? You have a very interesting background. So yeah, tell us a
Yeah.
little bit about
So
that.
So I'm a little bit older now, but I used to be pretty young and I was in the business. So I was 20 when I started. I was in college. I went to a seminar they were talking, it was one of those get rich quick seminars, basically. They were advertising wholesaling and they would go all around the country. So I went to the seminar and they were explaining how to do a double close. And I remember learning about wholesaling before that, but I never really connected the dots. And in that first seminar, they upsold us into the second seminar. And that was I think it was $2,000 to go to the second seminar. Me and my friend split it 50-50 because you could take a guest for free. So then we were two 20-year-old kids in this seminar, and they pretty much told us everything. This is how you flip, this is how you wholesale, you got to go out and market. And I was so young and naive at the time. I'm you know what? I'm still in college. I don't really want to have a job. Let me figure this real estate thing out. So it took me 9 months after that second seminar to do my first wholesale deal. And it was super hard. And it was I felt like I would never be able to have success because I was trying all this stuff and it was not working. And I didn't know what I was doing. But I got my first check for $5,000 because I split a 10K wholesale fee with a mentor. And after that, I started to slowly do more deals because I understood the process. And then, fast forward to this day, we'll do 55 transactions this year, pretty good margins. And I got 3 people who work full time with me, including myself. So a total of 4, but 3 team members.
Yeah. Did you always have interest in real estate? Like you went to that seminar and you said you had been reading about wholesaling, or just
Yeah.
you were in college, you were trying a couple of
I
different things?
I mean, I kind of knew that people in real estate did pretty well, like rentals and stuff. Like I always knew that, I guess, intuitively. But I originally wanted to do like stock trading and investing like in the market. And I would watch like Jim Cramer and, go read whatever those blogs. And it just never really jived with me. And then when I learned about real estate, it just seemed more of like a people business. And you can kind of control it a little bit more, right? You can control what you pay for a property versus a stock. It's a little different. So I think real estate just kind of resonated more with my personality. And then once I started to make income in the business, because the thing that a lot of new people don't realize is like you're gonna work for free, or you're gonna like pay to work in the beginning because you're spending money on marketing. So when you actually start getting paid when you're closing deals, you realize that you can actually make this career out of it. So I always tell like new investors, like it's so important to see your first deal through, get paid, and then decide if like, do you want to do that again? Or is this something maybe you're not interested? Because some people do a deal and they're like, I don't really like this and I want to move on. But you should always see your first deal through, in my opinion.
Hmm. At what time did you realize, oh man, this is something I can make a career out of?
That took even longer, man. Because the first couple years I was like sporadically doing deals in New York, and I was like, this is really hard because New York, there's like lawyers and stuff. It's like
Yeah.
super hard to do business there, especially where I'm from. It's like near the city, so like everyone's got a lawyer and it's really expensive. So I was making probably like $40,000 of like gross income with minimal expenses, and that really wasn't enough to, I guess, live on my own. I was still living with my parents. And the thing that I guess changed the game for me, as I would say, is like I started to learn that you could virtually wholesale and virtually do deals in other markets. And at the time, that wasn't very popular. Like now, it's like everyone does that. But
Yeah.
I was like, wait a minute. If I can not do this in New York, and then I don't have to deal with a lawyer, and I don't have to ever go to the property, like that would solve a lot of my problems. So what ended up kind of working out to where I made this thing like a real business was I was in Investor Fuel through John Martinez. So he basically got me in there for free. And I met this guy in the mastermind. His name is Jason. And he just seemed like a really cool guy. He was in Dallas. And I told him, I was like, hey, like, I'm starting to like do some marketing in Dallas. I was going after like vacant properties, and I can talk about that, at length if you want. And I said, when I have these opportunities, I need somebody to partner with because I don't live here and I don't really know, the market that well. So like probably a month later, I called him and I said, hey, I got this lady who wants to take this offer on this vacant house. Can you go out there and sign the contract because she doesn't have like DocuSign? And we'll just split it 50-50. And he's like, sure. So we wholesaled that for $18,000. We split that, 50-50. I got a check, or I got a wire for 9 grand, and I never went to the property. All I did was like get the seller to take the offer.
And this was in Dallas.
This was in Dallas. Yeah. Yeah. And
Wow.
I'll tell you how it came full circle because it's like kind of a long story. And then like the next week we had another property where it was a $30,000 assignment and I made 15. So I split that. And I started to understand like if I can get really good at finding the sellers and negotiating these things over the phone, I can partner with Jason on a JV basis, and he can take care of all the back end stuff because I still was pretty new at that point. And we started doing like 2 or 3 of those deals a month in Texas. So I was, not netting the full amount. I was taking half home, but then I was really able to focus on the sales and marketing part of the business. And that's how I started to, make a good amount of money as a young kid doing it virtually. I eventually moved to California during this whole process because I no longer needed to be in New York because there wasn't really doing deals there. And I started like virtually doing deals in Dallas for like 3 years straight. And after some time, what ended up happening, and this is how I got back into the New York market, is I saved up a good amount of money from all these Texas deals because we were wholesaling a lot of stuff. And then after like 6 months, I had some money saved and we would buy them. And like these were cheap back in the day, like 30 grand, 40 grand. We'd buy them, we'd close on them, clean them out, relist them, make more money. And then I would save a lot of that. And then eventually what happened was like there was only so many of these like ultra distressed, like tax delinquent, vacant, inherited properties in any given market. And I feel like at the time I had most of them in my CRM. I'm like, all right, I pretty much have all these. Like I'd have to go into a new market or start to do like direct mail in Texas. And I knew that was super saturated because Dallas is like very competitive. So then I had some money, I had a lot of experience, and I said, well, what if I try to now spend real money on direct mail in New York, which I already knew from like starting out there. And this was in like, at that time, it was probably 2019. And the competition was way less than it was today in New York, at least. So back in the day, I used to spend like $2,000 to $3,000 a month on direct mail. I kid you not, and get like 1 or 2 deals consistently from every mail.
Wow.
It was like 10 to 1. It was crazy. And, that's how I eventually built the business up. And we've always evolved since. But started in New York, went to Dallas for a while, cut my teeth. And then once I had some savings and experience, I then eventually went back into New York to like establish myself.
Right. So you're still doing everything virtually,
Still
but
doing
you're
everything.
doing it in the market that you originally started out with, right? In
Yeah.
that prime, that's your primary market. And
That's my
then
primary
wherever
market.
you're living, you'll do some deals in the local market.
Yeah, exactly.
Yeah.
Nothing crazy though. It's not like a
Yeah.
real, like in San Diego, I lived there for 6 years. I probably did 12 houses there.
Okay. I
I
mean,
lived there
it's
for
a
6 years.
super competitive market,
Super
but
competitive
yeah,
market. Yeah,
yeah.
crazy.
One deal in San Diego equals like 6 to 10 deals in Midwest, I feel like. Yeah.
Yeah, it really does. And the
Yeah.
profits, I mean, some of the spreads we made in California were like, it's insane
Yeah.
because it's just so
Yeah.
competitive,
Yeah,
you
exactly.
know?
So now that you're in Seattle, you're gonna stick with still the New York market. Like that's a market that you're never going away from, right? You have systems and processes there. Even though it's
Yeah. So
I've talked to some other investors, like I don't know if you know Michael Pinter, he's in New York
very good friend
market.
of mine.
Oh my
Yeah.
God. He told me stories, I couldn't even believe it. Like how stupid it is in New York to do business. And I'm like, you still do business there? It's like, yeah, I mean, I found my niche. Yeah.
Well, I'll tell you what, I actually listened to that interview with you and Michael. It was awesome. I
Yeah.
think it was like a month ago or something. So the
Yeah.
reason I stick around in New York is and it really doesn't make logical sense unless you're like from there. Believe it or not, it's less competitive, but it's less competitive in general, but it's still way more competitive than it was back in 2019 because there was like no one in 2019. Now there's like a decent amount of buyers, but it's nothing like San Diego or Dallas or Phoenix. Like it's not even close to that. So if I'm competing with somebody, there's probably like 1 or 2 people max. Second thing in New York is that because it's so hard to like do the contracts and stuff with the lawyers, it's very hard to get screwed out of a deal after you have something put together because everyone has a
Yeah.
lawyer. And then the third thing is the spreads are really high because the purchase price is really high. So like a $30,000 wholesale fee is normal in New York because it's like the ARV is 600 grand. So it's really not that unreasonable to make a 30, 40, $50,000
Right.
assignment fee. And I know everyone there. Like I've been around, if you look at Velocity House Buyers, it's like all over the Hudson Valley. So,
Yeah.
I got a really good database of insurance people and attorneys and, my accountants there and the contractors I have there are great. So it makes sense to stay there. But I will tell you, the issue with New York, if you're doing this, I guess at scale, I'll put air quotes around that, is that your cash conversion cycle is super long, even on wholesale deals, because, the average assignment, probably takes 2 or 3 months to close because of the lawyer stuff. So what happens if you have a lot of overhead, like in our business, we have a decent amount of overhead, if we're not closing deals in other markets, our cash position dries up quick because we're looking at these accounts receivable that are coming in a month
Right.
or two, but our bills come due every 30 days, right? Especially marketing.
Right.
So these other markets kind of fill the gaps because we can do properties quicker when there's no lawyers. So that's how I can kind of justify being in a few different areas.
If you're just in New York market, could you have sustained your business the way, you're saying like it's almost like you're using funds from your other markets, Seattle now,
Yeah.
to like fund your deals in New York. If you were just in New York, like how would you go about
It
that?
would be tough, man. I would have to rely more on, like, we get a lot of deals from wholesalers and referrals, which cost
Okay.
nothing essentially. But it would be tough because the other operational expenses I have are still 30-day bills, right?
Yeah.
Payroll, software. So it would be tough, but we could probably make it work, but we'd have to spend less in marketing because like I
Yeah.
spend 20,000 a month in marketing, which we could talk about what I'm doing. Um, but I have other deals coming in from other areas to, kind of fill the gaps from it. It's really a cash flow thing. It's not really, it's like we still have good margins, but from a month on month cash flow, New York, the sales cycle takes so long.
Yeah.
That's when like there's a lot of guys in my market that are like one-man shows and they make $500,000 a year. They have minimal overhead and it's never an issue because they're not doing that many deals, but their spreads are big. They don't have a lot of overhead. So all the big players in New York, like even like Michael and these other guys, they usually do business in other markets as well to offset the BS that happens
Interesting.
in New York.
Interesting. Yeah, you're so right. Michael mentioned that he's doing deals in Texas now.
El
Yeah.
Paso.
Yeah,
Yep.
El Paso. Yeah.
Yeah.
So you have a 20K monthly marketing budget. How are you spending that money? Especially this August 2024. SMS is super regulated. I know you were big on that. Cold
Yeah.
calling is getting tougher. What's working for you right now?
Direct mail and pay-per-click, which are
Is
the two
that
most expensive channels. That's it.
is that all you're doing? Just nothing
That's
else? Direct mail, pay per
from a
click?
paid marketing, it's direct mail and pay-per-click.
Is
From
it
like
like half and half?
no, it's 75% mail and then 25% pay-per-click.
75%. Wow. Like
Yeah,
15,000.
15,000 in mailers, yeah, every month.
Wow.
That
What's your
works.
auto?
That channel
Yeah.
works so well.
Yeah.
People just
Ha-
don't want to spend the money, but like it's the thing with mail and mail, listen, I'll be the first one to tell you, mail has gotten a lot harder. Like
Yeah.
no question about it. Like the
Expensive
response
also.
rates, yeah, it's expensive.
Yeah.
But
Yeah.
what I've seen with mail and the way that I can justify it is that I look at mail like you're going to send, let's say, I don't know, 25,000 mailers a month or whatever your number is, make the number up.
Yeah.
You're guaranteed, assuming you didn't screw the list up, to get a certain amount of calls, like almost guaranteed. The response rates are low, but you're going to get calls. Out of those calls, you're going to get leads. Out of those leads, you're going to make offers. And out of those offers, you're going to, get business over time. So the thing about mail is that the money you're spending like in month one usually doesn't pan out till like month 4, 5, or 6, especially in New York. But then month two's spend produces like this retroactive revenue, right? Because like a lot of our deals we get from mail are on the follow-up, but then we'll have one come in like right off the bat and we'll make 30 on it. But then
Right.
that same campaign that we spent the, let's call it the 15 grand on, will produce another deal that we'll make 20 on. And then it starts to compound and it's very predictable. Like I know when we send out the mail, the phones are going to ring, we're going to get leads, we're going to make offers, we're going to have business, right? The thing about texting, and I used to love texting before it got really regulated, was you could market to the same audience of people at a way cheaper cost per unit, right? Like a text message costs pennies compared to
Yeah.
direct mail is like 50 cents. And, it was like, okay, this is great. But I knew over time that was just going to keep getting worse. Pay per click, on the other hand, is very tricky. And I'm still gun shy with it. I don't spend a lot of money on it
Are
because
you
it's
doing it? Are you doing it in-house or you have an agent?
agency. Yeah, I
Okay.
have an agency doing it. So that channel is like a roller coaster. Like one month you might get great results, but then the next month you're going to spend the same amount of money and you might get zero results. And then the month after that, you might get zero results. But then the month after that, you might get 2 deals. So it's very like unpredictable. But if you look at the return on ad spend over like a 12-month period, it's usually like I think I don't have the 2024 data, but in 2023, like year to date, we had 4-to-1 on direct on a pay per click.
PPC.
So
Yeah.
because
I would
it
say
was a
that's
roller coaster.
pretty,
Yeah, it was
yeah,
a roller
pretty
coaster.
on par with, yeah, what you would expect with PPC, like 3.5 to like 4, 5x is what you would expect. I mean, depending on the
Yeah,
market. Yeah.
that's normal. I think the
Yeah.
guys who say they're getting 10-to-1, I mean, I don't
That's
know how they're
exceptional.
doing it.
Those are edge cases, but I would say like, I mean, what we notice is anything below 3x, and correct me if I'm wrong, you should get away from that marketing channel. Look at, like what the holes are in that marketing channel. 3 to 5x is good. Anything above 5, you should like just keep doubling
You
down
should
on
just
that
double it.
marketing.
Yeah.
Yeah.
Yeah, I would say, I mean, pay per click, like I said, I'm like considering stopping it because it's so expensive and New York
Right.
cash flow is a real issue. But the thing with pay per click that like I'll give you an example. This was because I remember last year, I have the full data set from 2023. We had like crappy results in like the middle of the year. Like we did one great deal right off the bat that was a home run. And then we had like crappy results. And I remember last year, I was like, I think I'm going to cut this. And literally in 1 week, we had 2 deals come in back to back, like on like a
Yeah.
Tuesday and then on a Wednesday. We made like $60,000. And now I'm like, okay, that works. Like we got to
Yeah.
keep this. But the thing with pay per click that I don't like is that not only is it really expensive, and they're probably calling 4 to 5 different companies because that's the nature of the seller profile. They're in like research mode, but if you don't answer that phone within like 2 minutes, you're toast. Like you
Yeah.
forget it because the competitor is going to answer it, and then you're at a huge disadvantage. So, like, I don't like running campaigns on weekends because my team doesn't work on the weekends, and I might not be available to backfill. So I just don't like how you always have to be like near your phone. Like if I had no team, like I'd have to like have my phone next to me answering PPC calls all day. Like I just don't like kind of being in that mode.
Yeah. But
But
you're right, for PPC, you need to do that. It's like
yeah, you
speed to
have to.
lead. Yeah.
That's all it is. Even pay per
Yeah.
lead. We cut it out this year, but last year we were doing pay per lead as well. And that was pretty good for a while. But then I noticed that dropped off a
Oh
cliff.
yeah. That's
It
one marketing channel you hear so many mixed things. People that
oh,
love it, absolutely love it. People that hate it are like,
yeah.
man, I can't believe how can people make money with this?
Well, I'll tell you about that. There's a company called there's a company I'll mention. I have no affiliation with them. They're called Property Leads. In my opinion, they have the best quality pay per lead leads. Like I think their quality is the best from what I've seen because I've used them a lot.
Right.
When they first came out, this was 2022, I think, at the end of the 2022. I was still living in San Diego. I was getting 1 out of 5. Like 1 out of 5 leads was a deal, and our like
One out
return,
of five.
it was one
Wow.
out of five because nobody was using them. It was a brand new company. All of their leads were pretty cheap because there was not a lot of customers, so the demand wasn't there. And they didn't have like, because now they're doing other things as well. It was all organic SEO leads, right? And they were selling them off for 200-300 bucks a pop, and we were like cleaning up with them. But then what happened was that they got more popular, right? And
Yeah.
this is supply and demand. And then the demand increased, their prices went up, and then they had to start using other ways to get leads because you can't depend on the SEO. So what happens is like some of the new pay per lead comes out, they're really good, but then all of a sudden you'll see the price go up, and then the quality gets a little
Yeah.
hit or miss, and then it's like you can't rely on it, right? Because you're not in control of your success there because it's
Right.
not your asset, right?
Yeah, and I've heard with some paper lead providers, not property leads, but just I've heard about some other paper lead provider. They start providing Facebook leads, which are totally crappy compared to your
Horrible,
PPC lead.
horrible.
But then you're paying the same price for them as compared to your paper lead and your
Yep.
PPC lead. So that's where your ROI definitely goes out the door. No, I mean, what we're noticing, the investors that are successful, like, I mean, ultra successful doing 20, 30 deals a month, is they're using, definitely relying on inbound marketing, PPC, SEO, direct mail, TV, radio. I think with all the regulations that we have with SMS and code, it's good in a way for experienced investors
Mhm.
because there's a lot less competition from newbie investors. It's not 2023 where you could just buy a list from PropStream, skip trace, start
Yeah.
texting all within an hour. You can't do that anymore. And even if it takes you a month to be up and running with it, and if you're sending spam, you get shut down pretty quick now. So which is a really good thing. But I want to go back to the point, it's like the way I look at investing, wholesaling business, it's a marketing business
All
above
it is.
anything else. How do you get the courage to spend money on marketing? And it's not like, you put 5,000 in, you get 20,000 back. It doesn't work like that. Some months you'll spend money and nothing comes back. You still have payroll, you still have your other operating expenses that you have to pay for. How do you keep going, right? I mean, that's the toughest part. I mean, then you start questioning the marketing channel, and the secret isn't consistently, doing the marketing, but how do you stick with it? Like, I'm sure you have your doubts,
Oh,
some months where you don't get
all the
deals. Like,
time, man.
how do you work with that mindset?
So here's what I tell you. And if you're brand new, it's hard to believe this because you haven't done it. But when you have the experience knowing that, let's say, direct mail works in the past, and because you track your stuff, that's the key, is tracking your
Yeah.
data, that when you spend X amount of dollars on marketing over time, you're going to get a return of Y, hopefully 3 to 1, if not higher. Historically, when you do that and you have all your, old data, you're like, okay, well, if I spend the 10 grand a month, which is scary, historically, I'm making 30 to 40 back. The logic has to kick in your head and be like, okay, well, if I want to continue to have this success because I'm transacting real estate, I'm not keeping rentals, I need to spend this money or else I'm not going to have the results. Because the thing with mail and any of these inbound channels is like, you're going to spend like the effort and money you spend month one, you don't see through until month 3, 4, 5, 6, right? So you got
Agreed.
to know,
Yeah.
like, if you want to have a successful future, right, you have to plant those seeds today. And you got to understand too, if you track your numbers and you understand your KPIs, which I can tell you what I track, like it's just math at the end of the day. It's not really
Yeah.
like it's like a gamble. Like, okay, I'm going to get worst case 30 phone calls, worst case. Out of those 30 phone calls, worst case, I'm going to get like 10 leads or 15 leads. If I do 3 mailings, I'll have, 30, 40 leads worst case. And there's a guarantee we're going to get a deal out of that. Like, it would be almost impossible. Like, if you get 40 direct mail leads that are not take me off your list, like actually, hey, I want to sell my house,
Yeah.
even in like a San Diego, because I used to mail in San Diego, you're going to get a deal. It's just
Yeah.
that deal
Agreed.
might come from follow up. But if you track the revenue that you close back to the spend, it's like it always works. And that's
Yeah.
why these mail houses are huge, right? Because they
Yeah.
have customers and people know that it works. Because if it didn't work, they wouldn't be in business, right?
Yeah.
So you have to track the numbers and then just know that over time it will work. And that's why new people, like you said, like, yeah, you could just go download a list on PropStream that everyone downloads, hit them with a text, and like, it's like low hanging fruit, but now that's gone away. So you have to find a way to be more, courageous and spend that money. Because if you're new, you can still get in the door. You can drive for dollars. You can, find like the really distressed lists and like flag the vacants. You can do that, I'm sure, on
Yeah.
REsimpli. You could have the list
Yeah.
stacker. You can still get in the door, but it's just gonna have to put a little more legwork in nowadays.
Yeah. Or, I mean, I always tell newbie investors the best way to get started is partner up with an experienced person. Learn
100%.
from them. And there's no better way to learn than to work with an experienced investor. And you spoke
Absolutely.
about tracking numbers, which we're at reasonably huge believers of. What do you track in your business? Like what are some of the numbers that you look at on a weekly or monthly basis and you make decisions based on that?
Yep. So I look at closed revenue, right? Straight revenue. I look at the amount of contracts that got signed. So sorry, I close revenue, close deals, right? Contracts signed, offers made, leads generated, marketing dollars spent, right? Because that's one funnel. And this is excluding referrals because that's free. So if I spend X on marketing, I'm going to get a certain amount of calls, right? Primarily through direct mail. Out of those calls, we're going to get a certain amount of offers out. Out of those offers, we're going to get a certain amount of contracts signed. Out of those contracts signed, we're going to get a percentage of deals closed. Out of those deals closed, we're going to have a revenue number. So what you want to look for when you break those down from a high level is like, let's say you get 10 contracts signed, but you only close on 3 deals. Well, there's a problem there. You're either locking bad deals up, which is a false vanity metric, or your deals have like title issues or something, or, whatever. Maybe there's like a delay in closing. So you have to like look at one number and then look at the metric above it and see if it's in line. Like, let's say you spend 30 grand in marketing and you get, I don't know, 300 calls. And out of those 300 calls, you only have like 50 leads. Well, now you probably mailed a bad list or you did something wrong, because normally
Right.
that wouldn't add up. Like, usually from what I've seen, about half of the calls that come in from a mailing campaign are leads. And then the other half are take me off your list, or they're
Take me off
complete
the
like
list.
tire kickers. So
Yeah.
you got to start with like the thing you have control over, which is the money, right? Or the effort if you're new. And then use that as the baseline to then go down to calls and then leads and then offers. Because like if we're like, here's another example. Let's say you get 50 leads, but then you only make 10 offers. Like you're not making, like
Yeah.
if someone came to me
Yeah.
and they
Why?
said, yeah, I'd be like, well, you're
Yeah.
not making enough offers. You had 50 opportunities to make an offer and you only took advantage of,
Yeah.
20% of those. So you need to make more offers and then come back to me and I could see like maybe your conversion's bad or something.
Exactly.
But if you have those tracked, you at least can know where the issues lie, right? But a lot of people don't track their numbers, and then they are emotional and they're upset and they're like, "Oh, this doesn't work." And then I'm like, "Well, usually I say, okay, you're saying you haven't gotten a deal in 5 months. How many offers have you made in the last 5 months?" And you know what they say, Sharad? I don't know. There we
Yeah.
go. You don't even know what you're doing. You're not even tracking
Yeah.
your offers.
But you're so right, Greg. I want to go back. Like, if you got 50 leads, people that said, "Hey, I'm interested in selling my property," there's
Yeah.
no reason why you should not be making an offer. It doesn't matter if they're asking 200,000, but you want to offer
Yeah.
100, still make an offer of 100. Dude, there's crazy things. You and I both know there are crazy things that happen. We just locked up a deal. I mean, we're actually selling it this week or next week. We're gonna make 85 to 90,000. We bought it
Amazing.
for 90, put like 510 into it. This was on a 1 year follow-up sequence, right? And we're going to make about 85, 90 on that deal. Originally, we were willing to pay 110. We ended up buying for 90. because the seller situation changed, but we had all the notes. The seller didn't remember we were offering 110. They probably had a bunch of other offers. But it's crazy that if you do not make an offer, it's like you don't have a chance of scoring unless you take a shot. It's just as
Exactly.
simple as that. And there's
That's a
so
great
many
analogy.
people that just get discouraged based on what the seller is asking. What seller
Yeah.
is asking, that's their opinion of the value. You still have to make an offer on the property. That's the only way to see if the seller will accept it or not. And yeah, you're so right. If you get
Let me
50
give you an
leads,
example on that,
yeah,
Sharad. That was a great. So you said that was a 1 year follow-up
1 year,
and
400 days, 400 days,
400-day follow-up, because I'm sure you
400 days.
tracked it. And you're
Yes,
going to make 90 grand because
from
they
direct
were
mail.
originally, yeah.
This was
So
from a direct mail campaign. This was from a direct mail campaign we had stopped mailing to because we were different tracking. This was from a direct mail campaign that we had stopped mailing to about a couple of years ago. The person held on to our postcard. Yeah,
those are the best leads, by the way.
those
People talk about.
100%. Those, yeah,
They
those
call
are,
you 2 years later. They're
yeah,
ready to go. Yeah.
yeah. And we're like,
Amazing.
oh wow, we haven't even mailed to the list in 2-3 years, and they call back. Those definitely are the best deals where people call you back after a year of follow up or so. Yeah,
That's why I like mail, because
yeah.
you get these retroactive, like it's like an aged lead where they've had that postcard. And I'll give you an example on that because it takes the 2 points you just made. This lady called us about a month and a half ago from an old mailing, like from a year ago, I think. It was at least a year ago because we cut the campaign. And then she had her house Sharad, listed on the market for 389, listed with a real estate agent. Okay. On
In New
MLS,
York.
you're thinking this person would never take a discount. We figured out that she was motivated for whatever reason. She ended up selling us the house for $260,000.
Wow.
And it was
From
listed.
389 to 260.
Yep. It was
That's
originally
crazy.
250, but I gave her 10 grand more because I didn't want to rent it back to her because she was out of her mind. So I said, I'll give you 10 extra thousand if you just get out in a week. And she's like, okay, cool, I'll do that. So
That is
yeah,
crazy. You
listed.
know what? You know what I love about direct mail? It's people don't get it. It's like something tangible that
Yes.
people get. It's the only piece of market that's something. There's something about that. There's something about people receiving something in mail. And you know what's the crazy thing? I tell people all the time, and I don't know why people don't do this. They'll send out direct mail to their list, right? And then you get so many calls from direct mail. People say, hey, I'm interested. Then you cannot get hold of them. I tell them, how did you initially get the lead? Direct mail. Send them another postcard as part of a follow-up. It'll reach to them. If something tangible, it's something in front of them physically, and it might trigger them to get a call. It's such a simple thing. I mean, yeah, direct mail for me, I feel like it's the best long-term marketing channel. Like one thing we notice across all investors that are doing consistently doing deals is they have direct mail as some part of their marketing, whether it be their primary or small part of it. But that's one marketing channel that we consistently notice every successful investor is using. Not everyone is using PPC, not everyone is using TV, not everyone is using direct, but everyone is using direct mail, whether they're using it as a primary marketing channel, whether they're using it as a small niche list. We have a guy from Texas, they do about 30, 35 deals a month, and they
Oh,
get
wow.
85% of their 75 or 80% of their deals from direct mail. Simple, but
Wow.
they're super consistent. They're
Yeah.
very consistent. That's what it's all about. Consistent, consistent, consistent.
Wow.
Yeah. So
Yeah. It's
speaking of
crazy.
marketing, how long would you stick with the marketing channel before you kind of make a decision, all right, it's not working? Is it based on dollars? Or is it based on time?
That is a great question. I would say it's a little bit of both. So the number one thing I see is that people will do direct mail for a month and then it won't work. And I'm like,
Oh
okay,
yeah.
you're
That's
already
you
lost
might as
before
well
you even
not do
start.
it. Yeah.
You don't even do
Yeah.
it. I tell people 6 months. If you don't have like elite, well, New York is different because it's such a long lag time. If you don't have like quality leads and contracts pending, like offers accepted or whatever, or in another state contract signed in 6 months, and you mailed that channel or what that list for 6 months straight, and it was more than 1,000 people, it was like 2, 3, 4, 5 plus thousand. At that point, I would not necessarily stop doing direct mail. I would pause the campaign and I would break under the hood and see like, okay, like was the list screwed up? Was the marketing message not there? Were you not answering the phone? Right? Some people just
Yeah.
like they won't answer the phone. They won't call people back. So like they're getting these calls, but then they're not returning the calls, and then they never get like a quote unquote lead. So I would say 6 months would be the time horizon for any channel, because you can get, I mean, most markets you can get a return in 6 months. In New York, you could get pretty good feedback, if not a return in 6 months. And then, at that point, I would evaluate it. But in terms of
Yeah.
dollars spent, direct mail, oh boy, 10, 15, I would say 25, 30,000. If you spend 25 or $30,000 and don't get a deal, even if you're in
Right.
like the Bay Area or Seattle,
Yeah.
something's wrong. Yeah.
It's about like 15 to 200, 1,500 to 2,000 a month over 6 months period, right? 1,500, 2,000 every month for 6 months. Yeah, you should definitely get a deal
Yeah.
out of it
You
if
should
it's the
have a
right
deal
way.
out of that. That's
Yeah,
$12,000. Yeah, you
yeah,
even in a high-end market like a New York or
yeah,
Seattle, you should get something like that. Because
yeah,
the thing with the mail is like it really comes down to timing, right? It's when
right.
that person gets the postcard. I'll give you an example. I've been mailing people forever on the same list, and we get all these leads. It's like, I've gotten your postcard for 2 years. My tenant stopped paying rent. Let's do the
Yeah,
deal. They've known about me for, that long, and they're calling me now. And it's like, okay, well, if I just sent them the mail this month, would they have called me? Or is it
yeah,
that 2 year
yeah,
effort? They see velocity everywhere. When the tenant stops paying rent, they know who to call. So it's
yeah,
just timing. You can't control the timing, but you can control the more units you have out in the mail, the
yeah,
higher the chances of someone who has a problem to call you, right? Because you said direct mail is tangible. They can see it, they can feel it, they
yeah,
can save it,
yeah,
unlike an online digital ad.
yeah. And then is there any special list that you mail to, or you have a pretty like absentee, owner, vacant properties, and
Yeah.
you stack your list, nothing crazy?
So I got a lot to say about this stuff. I love this. I
Yeah,
could talk about this for hours. So I've mailed the typical absentee owner, like unknown equity list, very successfully. That works. You got to pull that list the right way. You got to make sure the last sale date was a long time ago because that you got to have an aged property with like distress. Usually they're either beater rentals or they're vacant, from what I found. If it's like owned for 20 years. The other list that I like is like the niche stuff, like probate, pre-probate, tax delinquent.
right,
Those always work, right? Inherited property, like we just got a great lead yesterday. Inherited property, they want to sell it as is, blah blah blah. The other list that people talk about, and I'm starting to spend more money on it now, is like this predictive list. Like there's companies out there that have like
yeah,
some sort of model. It's like basically a giant lookalike audience base, from what I
right,
found, and it's like the data for like Organic, 80/20 or whatever. They have like these lookalike audiences. So like they'll take all the sales that were to investors at discounts, and then they'll like build a model around
right,
the people who would do that. And then they like, yeah, I don't know, some sort of fancy thing. We're mailing it, it's working, it's getting us deals. I don't know
right,
what the heck like it comprises of, but it was expensive.
right.
We're seeing the quality of the lead is much higher with that list. Like everyone who's calling us is in distress, which
That's
is
interesting.
interesting.
Yeah.
Yeah.
Yeah, no, I think it's about starting with the quality of the list. And then once you have a good quality list, then it's all about being consistent. Like when people come and ask us, hey, what marketing channel should I start with? Our answer is the one that you can stick with the longest. At the end of the day, every marketing channel works, but can you stick with it long enough? I think that's the key. People will do direct mail 1 month. They're like, oh, direct mail doesn't work. I didn't get a lead. Then they'll jump to cold calling. Then they'll jump to like the little bit of paper lead. Then they're like, oh, I'm going to do texting. They're just all over the place and they're not getting any leads out of it. Yeah.
Sharad, what have you seen with your people with like the TV? The one media I've never done is TV and radio. Everything else I've done. Have you seen that be a pretty, because you have all that data, right? Is that a good
Yeah, I
chance
think
for people, or is it kind of
it
expensive?
definitely it's expensive, but the thing with TV, it's like sometimes it's hard to, yes, I mean, of course you can attribute a marketing lead to that channel, but sometimes what happens a lot of times is you'll notice that you're doing TV and radio ads, and then of course you'll use different tracking numbers to, track the calls and stuff. But a lot of time people will actually go to your website and you'll see a spike in
Mm,
your website traffic. So it's hard to attribute that lead to TV and radio, but you clearly notice a spike on your web traffic, and then you'll all of a sudden start seeing more leads from PPC, if you're doing PPC or SEO leads, because people are finding you, but then they would have never found you if you were not doing TV and radio ads. So that's
interesting.
one thing that's very interesting is it's kind of hard to, when you get a lead and then you say, hey, how did you hear about us? Yes, you can go based on what they say, but some people have no idea. They get so
Yeah.
many, ads from
Yeah.
different companies, and they may say, "Oh, I saw your Facebook ad." And you're like, "Oh, we're not even doing Facebook ads." How do
Yeah.
you see our
Yeah. Yeah.
Facebook
Yeah.
ad? So, but that's one thing we notice is people doing TV and radio, they will see a spike in their website traffic because now people are finding them. So that's what, so they start getting more leads from that. Yeah. but definitely the market is shifting towards inbound marketing, right? Your
Yeah.
PPC, paper lead, SEO, TV, radio, direct mail, like SMS is almost pretty much at the end of its life. Cold calling is definitely getting tougher. So it's
Yeah.
people that are investing in long-term marketing channels are the ones that are definitely going to come out
Like
ahead and
building a brand.
building a brand exactly. And then
Yeah.
being consistent with their marketing, right? It's like, I always give an example of, let's say if, I have a Toyota dealership that mails me a postcard every quarter, once a quarter about some special going on. I'm not in the market to buy a car, but they keep doing that. It's like 50 cents, 60 cents to them. They're like, mail me a postcard. Let's say a year and a half later, my car breaks down. Just because they've been consistently mailing me a postcard, my first thought, hey, let me call that Toyota dealer. If I'm in the market for, that kind of a car, I'll just
Yep.
call. It's the same thing with the marketing that we are doing. When you send a postcard or letter, it's not that, the seller is waiting. Oh, I want to sell my house. I wish someone would send me a postcard. It doesn't work like that. But if you consistently send them, especially in our market, like, New York is a little bit colder state also, but we invest in Indiana. Like people in the summertime, they're enjoying the weather outside. In the winter, especially the older folks are like, oh, I want to get out of it. I want to move down south. And all of a
Yeah.
sudden, they're like, oh, you've been mailing us every month. Are you still looking to buy? And then you just keep following up with them. You have to be in touch with them at the right time when their situation changes. Not everyone that you're mailing will have a situation, even if you mail someone who's going through bankruptcy or divorce. Not everyone has the same pain going through bankruptcy or divorce. But if you mail them long enough, then, it might just something might trigger and they're like, okay, I'm ready to sell. I just want to get out of that situation.
You hit it on
Yeah.
the head. It's so
Yeah.
true. That's what people don't realize. It's the consistent, like the Toyota is a great example because, like, yeah, I mean, half the stuff that I get in my mailbox, I'm like,
Yeah.
whatever. But I get emails all the time, which like is
Yeah.
similar. It's like, hey, this offer for this software, whatever. Oh, let me try that out.
Exactly.
You know?
Exactly. Like imagine how many, like think of how many times you do that. Like you get an email marketing with something. You're not in the market, but then when you are loosely in that market about that, then you will just by default subconsciously will go to that brand because you've been seeing that ad. It's the same thing with your marketing. Like they just keep seeing your postcard, your brand, your whatnot, TV ads, radio ads, and whatnot, and it just all it's a holistic approach towards your marketing, building your brand. Yeah,
So
that's what we see work consistently.
I bought this hat off of an ad like a month
You
ago.
did?
I saw
Yeah.
this cool hat. It's got the
Oh,
American
nice.
flag on it.
Yeah.
And I was on Instagram and I saw this hat and I'm like, that is, and I've seen it before, but then I was
Yeah.
in the market to buy a $20 hat
Yeah.
and I bought it on the
Dude.
spot. So their
Yeah.
KPIs are even better with my business now, I
Exactly.
guess. Yeah.
Exactly. It works the same way for someone who's selling their house. It's a bigger decision, of course. It'll take a little bit longer versus like
Yeah.
buying something off, Amazon or whatever for 20, $30. But it's the same mindset, the same principles that we have. Just it's consistency. Like you do it day in, day out, you stay in front of them. And then when their situation changes, when they are like the way I think of marketing is and follow up is you just have to be in front of the seller and wait for them when they're ready to sell. You cannot force someone to sell. Yes, you can use some marketing jargon and whatnot language, but all the marketing does it just you hope you get a fair chance of making an offer on the property when they're ready to sell. That's all.
100%.
That's all we hope for. And we just say there are multiple offers. We just, hey, do you please give us a fair chance of, making sure our offer is competitive. And then we're doing our follow-ups. It's just about, hey, whenever your situation changes, just let us know. People get so hung up about, oh, I want to use this color postcard, that color postcard, I want to say this word. Yes, you can
Doesn't
do that,
matter.
it doesn't matter, but at the end of the
Yeah.
day, it's just about letting the seller know, hey, we're looking to buy a house. Whenever you're ready to sell, we're ready to buy. That's what it's all about at the end of the day. And then that's what we notice work for us. That's what we notice consistently works for some of our bigger investors, just being consistent. Like they're very, very diligent about consistently marketing because it is a marketing business at the end of the day. You
That's all
stop
it is.
marketing, stop getting leads, you stop making offers, stop getting deals. That's
100%.
what it's about.
Even if you're doing rentals, like I got rentals, you got rentals. It's like, we
Yeah.
want to buy these good rentals at discounts and
Yeah.
refi or own them in cash. Like you got to market for those. It's the same thing, right?
Yep.
It's
It's
the
the same
same
thing.
exact thing. So
100%, man.
yeah,
Yeah.
no, it's people, if they really studied marketing and got good at that, I mean, the real estate would take care of itself.
Oh, dude, seriously. Yeah. The selling someone is the easier part. I think it's just the marketing, knowing that you have to be just having the discipline of being consistent, even for 2, 3, 4 months. If you do not get any deal out of your marketing, just knowing, trusting that it's going to work out in the long term. You might be going through a cycle where you're not getting any leads. It could be seasonal, it could be whatever reason, but in the end, it's going to work out. And you get one deal, like where we're making 85, it pays for like next 2, 3 years of marketing for us.
Exactly.
And that, I'm like, oh, hey, there you go. It just covers, and then you just have to wait for those sort of deals.
Like, put it this way, let's say you're a wholesaler and you're new and you don't like really know what you're doing yet. And let's say you need 10 offers to make one deal. You get paid $1,000 for every time you make an offer. If your assignment fee's 10, think about it. If it's 20, it's 2,000, right? So think about it that way.
Yeah. I forgot who it was. I was talking to someone on a podcast, and he put it in such a good way. He said, he's giving some numbers. I forgot what the exact number. He said, we have to make 25 offers to get a deal. It was something around that line.
That sounds right.
Said every time we get a no, he's like, I get excited. I'm like, why? He's like, okay, then he's like, I know I'm closer to my deal now because I already have like one, rejection out of the way. I'm like, that's such a cool way to look at it. It just, it's a numbers game. You're going to get like 24 people pissed off, but one people accept your offer. So every time you get someone to say no, you're like, oh yes, I only have 23 rejections to go through before I get a deal. Yeah. It was such a different. Yeah, exactly. Yeah. And then you put it like similar. Just think about every offer that you're making, it's making you $10,000 basically. Just if you think of it in like, they're like, yeah, that kind of makes sense. If I make 10 offers to get a deal, all right, every offer, $1,000, I'm $1,000 closer to my deal now. I love that. I love that.
Exactly. I heard that a long time ago. I never forgot about it. So
Greg, this has been incredible, man. Thank you for your time. Couple of last questions for you. You've moved from New York, San Diego, Reno, Seattle. So what do you do for fun?
I go for hikes. I go for walks. I go swimming in the lake. I travel quite a bit. We're going to New Jersey tomorrow, and we're going to actually Japan in October.
Oh, cool.
Yeah, so we travel a lot. We don't have kids. We're pretty young still. I mean, not that young, I guess, but we don't.
You're 28?
29.
Oh, dude, come on, man.
I mean, it's not. There's
kids, baby.
There's kids in this business now that are like 21, and that's like
21. Yeah, I've seen like wholesale like 17, 18.
Yeah, it's crazy.
Like
I got a beard now. I look a lot different. No, I do a lot of outdoor stuff. I work out. I'm training for a marathon.
Oh, you are? Nice.
Yeah, so I've been running like a maniac.
Yeah. When are you doing the marathon?
New York City Marathon is the first Sunday in November. The New York City
Sunday, November. Nice. Good luck, man.
Been running a lot. Thanks, man. So I've been doing that. I stay active. Nothing crazy. I mean, I think I got all my partying days out of the way when I was like, 18. So I don't really do anything exciting nowadays. So it's fun.
You're talking like you're driving a minivan. You have 2 kids. You're 28, 29, man. Enjoy. Yeah. All right.
Minivan.
I know you. Yeah. I mean, I have a minivan. I love driving that.
You got a minivan? Okay, I got.
Yeah, I do. Yeah. All right. I know you love reading. What's the one book that's had the most influence on your life? Business book, personal book, or one of each?
The Compound Effect by Darren Hardy.
Oh yeah.
Dude, that's the easiest book to read. And it's just like, if you just literally read that book and like sort of implement it, like it's such a good book. It's like 100.
It's basically what we talked about, just like being
it's
consistent.
Literally what we talked about.
Literally what we talked, just being consistent with what you're doing. Anything in life. It's like losing weight, making more money. It just comes down to being consistent. Yeah.
I listen to it once a year just to remind myself basics.
Oh yeah.
The audio
it's such a great book.
Yeah, love that book.
Yeah, great book. All right, final question. If you could spend a day with anyone, dead or alive, who would you want to spend the day with and why?
That's a good question. I would say probably like maybe like Ray Dalio or someone, not because he's like a multi-billionaire, but just to like hear his opinion on everything, like in a one-to-one setting about business life, because he seems to have a lot of his stuff together besides the money thing. I would say like a Ray Dalio. Yeah, someone like that.
Great answer,
man. Someone I look up to, or maybe like Adam Sandler or something like that. I really like.
Oh
he's a good guy too. Like he's not just like a funny actor. Like I've heard.
He's from New York, right?
Yeah.
Is he?
Yeah, he's from New York.
Yeah.
Yep, Brooklyn, I think.
Yeah. All right, Greg. Someone listening to this wants to connect with you, learn more about your story. What's the best way for them to do that?
They can go to YouTube to Greg Helbeck, REI, or I think Greg Helbeck Real Estate Invest. Just type my name in, Greg Helbeck, on YouTube, and they can check out my channel. I put out 2 shows a week.
Yeah.
We're always putting out information, helping people. So that's the best way to
So
connect with me.
yeah, we'll put a link to that in the show notes. Great.
Thank you.
Thank you so much for coming on the podcast, man. This was absolutely incredible.
You're welcome.
Thank you.